Hey everyone, and welcome back. So today I want to go over what is considered fund overlap, because it's very important when you are investing in ETFs. You don't want too much fund overlap because you'll basically be investing in the same companies, which is kind of silly because you could just have one and then put more money into that rather than split it between two. If there's a lot of fund overlap, you're not really having the same different risk. So, for example, if you just Google ETF fund overlap, and you can see the address bar right here. Essentially, we're going to look up several. So if we start with QQQ, which is a major tech fund, this is pretty much a very good growth fund with heavy tech. And then VOO, which invests in a broad market, and it also invests a lot in tech. So we're going to see how much fund overlap you have if you do those two. And don't worry, we'll do a bunch more. So you see here, you want to look to overlap by weight. That's a more important number. So basically by weight, meaning how much stock is specifically bought for each of those companies and how many stocks you own for each one of those companies and how much those overlap. So QQQ and VOO overlap 52% by weight. They share 88 of the same holdings, and QQQ only holds 102. So that's a mass majority of VOO that's also in QQQ. So you pretty much have every stock in QQQ when you're also investing in VOO. And of course, there's way more stocks in VOO, which is why it brings the weight down to 52%. So then if you look at the numbers here, it shows you the main stocks that are both in VOO and QQQ and how much by weight they're both in. But I like to typically just look at these two numbers. It's much more easy than looking at the individuals because they're going to be small. You see 9, 7, 8, 6, 8, 6, 5, 3, 3, 3. Those numbers will add up, and then you get a percentage when you do the multiplication to 52% by weight overlap. So now if we take a look at QQQ versus VWO, which is an international fund, you see that there's zero overlap by weight. So if you want a little bit of diversification and you want to have different risk, meaning if QQQ plummets, you don't want to have too much of your money gone, and the international markets, which is the emerging markets as well, VWO, you see that there's zero overlap by weight, and they only share one overlapping holding. So only one out of all of these stocks, 6,146 in VWO, is also in QQQ. So now if we take a look at, let's say we want to do two broad markets, we do like VT and VOO. We see again that there's 55% overlap by weight. So you're not going to typically want to be in both of those. You're going to want to find something that's probably like 30% or less, especially if you want to be diversified. So let's look at SCHD, which is a diversification fund, a dividend fund with QQQ, which is the tech-heavy fund. So we see there's only 5% overlap. So this means that is very good diversification, and it'll hedge against risk in the market. So if QQQ plummets because technology is selling off, the dividend fund, SCHD, you'll be able to have less risk and then keep more of your money in the event where there is some sort of shift in the market. Which, if you're a long-term investor, it's not really a big deal. But if you're like in your 50s and you're close to retirement, you're going to want to probably have more SCHD than QQQ if you're worried about risk. If you're not worried about risk and you know the market fluctuates, then it'll be fine to have more heavy in QQQ. But SCHD would be a great choice to pair with QQQ. Now let's see if SCHD would be a good choice with VOO, which is a total market. So you see, again, that is a great overlap by weight. So these two together would be a perfect as well. So if you want to add SCHD and VOO, that would also be a good choice. So let's do one more. Let's do SCHD with VTI. So you see here, again, if you want to invest in a market that has a bunch of, stocks in the total market versus the dividend stocks, then again, that would be a really good diversification. Only 6%. You see here, there's 95 total stocks overlap, But if you look at VTI, since it's investing in a broad market, it's only 3,537 total stocks, and only 95 of those overlap with SCHD. So again, these are a really good pair to pair with. So again, you're going to want to do a fund overlap when you are investing, especially when you're a beginner. You do not want to have something that's going to be ridiculous overlap, because you're not really diversifying, and when there's a risk in the market, it is going to totally erase your gains and the money you have in there, and it won't really be good when there's a good performing market, because you're still in the same funds. So that is what fund overlap is. Follow for more information. We're going to be doing some beginner information on this channel.